freedom isn't the result of wealth, it's the foundation. Welcome to Wealth Independence, where freedom leads and real wealth follows through battle-tested strategies, hard-won lessons, and real-world experience. You'll discover how to accelerate your path to true financial independence. And now your hosts, Dustin Bailey and Adam Penn.
All right, welcome back to the Wealth Independence Podcast, where freedom leads and real wealth follows. I'm Dustin Bailey, and here is Adam Penn. Hi, Adam.
Hi, Dustin Bailey.
Wow, that's
what it sounds like when you say my name.
Okay, well, I try to be enthusiastic, you know?
I know, someone has to be. I'm always monotone and boring.
I was going to say, it's definitely not going to be you. That's for sure. So how are things? How are things out there in California?
I replaced the windows on my house over the weekend, or 4 of the 15, 17 windows, something like that on my house. They're all old single pane wood windows, and so just got 4 replaced, which was nice. Went and bought some at Lowe's and put them in, fixed some siding, built some trim. Yeah.
You found some new fancy super glue? Is that what you were?
It's not new fancy super glue, but yeah, I was telling you this before. It's like when you build the trim like around, because I put casement around the windows, so it's like there's like molding around the windows. And you cut all these little pieces, but when you cut the little pieces, like especially if you have like a bottom piece of trim that like has a return on the sides, so it wraps, those pieces are like 45 to like little 1/2 inch by 1/2 inch going down to nothing on one side. If you put a nail through that, it's cracking. And so sometimes I'll put caulking on it or something, but it slips. It's never quite right. But they make this super glue that you put super glue on one side and then an activator on the other. And then when you put them together, it's basically held like instantly. Like the first one I kind of almost had to redo because it was so instant. But you basically have to kind of get them at an angle and then slide them together so that they're already lined up, because when they touch, they're hard. Like it's done.
Gotcha.
Yeah.
That's interesting.
It was cool.
That's actually, so it's fair to say that you were doing some construction over the weekend.
I was doing construction. Is that what you're going to be your lead into our development interview?
That's exactly, that was pretty good, wasn't it?
That was, no one's listening anymore. No one's going to listen to this interview now. But
that's unfortunate.
Why don't you tell our guests about, or our listeners about this upcoming guest?
I'm excited about today's interview. So we've got Eugene Gershman, lives in Washington, just I guess a few miles north of you. All that West Coast stuff's just all the same to me from here in East Tennessee. But no, I can read the bio that Eugene sent us. I think it does a good job summarizing his experience. So he's a seasoned business executive, nearly 20 years of experience in real estate and construction, with expertise ranging from finance to technology. And he had a short stint. He talks about this a little bit in his bio here, but had a short stint in financial services, but then joined his family's business in 2004. The family business called GIS, and so under his leadership, they managed several real estate development projects, from construction of luxury single-family custom homes to large commercial projects, and they've kind of repositioned now to be more multifamily, but they've also changed their niche to partner more via joint ventures or co-GP structures with property owners. Definitely excited to dive into that a little bit, because that's different for most construction companies. But it allows them so that they partner with less experienced developers to actually then be able to bring projects to fruition. So Eugene's got a lot of experience, definitely something a little bit different than other guests that we've had. We haven't really had a lot of development or construction folks. It's not something that Adam, you or I have had a lot of experience with. So definitely excited to dive into the interview with Eugene, learn more about him and what they do. We can dive right into it.
Eugene, well, thank you for joining us today, and we're excited to have you. Why don't we just kick off? You know, we told the listeners a little bit about you before we started, but you want to tell us a little bit about you, your background, and why you like this industry so much?
For sure. I don't know if I like it that much, but, if you've been doing it for so many years, it's like, it's like if you've been in prison for so long, you get used to it.
You're used to it.
But no, thanks so much for having me on the show, guys. I am excited to have this conversation. Real estate developer, grew up in a construction family. My dad started this business as a general contractor, has been doing a bunch of complicated, crazy commercial deals. And I never really wanted to be part of the family business until he sort of, suckered me into it over 20 years ago. Never wanted to be a builder. He was always stressed out and angry and, pissed off at the world. And, everything was always going wrong in construction. I'm like, there's no way in hell I'm going to be part of this business. But then eventually, ended up joining the business and slowly shifted focus from GC to a developer. And then recently, like 5, 8, probably 8 to 10 years ago, shifted focus or picked a niche in our real estate development practice to strictly focus on partnering with owners to help them develop their sites. So instead of buying properties like a traditional developer and doing it all ourselves, we now only work with property owners around the country to help them get their sites developed.
And you started in finance, right? And then your dad suckered you in, as you said?
I did. Yeah. So I got my degree in economics, went to work for a small financial services firm, running retirement projections for old folks after, I was like 20 years old at the time. So anybody 40 and older seemed like, dinosaurs.
Yeah, they were ancient.
Right, exactly. So I was running retirement projections for those, 40, 50-year-olds. And it got boring. Went back, got my MBA. Last year of my MBA, Dad calls me and asked me to look at this complicated financial model that he received from a prospective future partner who invited him to joint venture on a deal. And he's like, look, I don't understand all this financial mumbo jumbo. This is your thing. Why don't you take a look at it? One thing after another. I looked at it. It was one of the most complicated financial models that I'd seen at the time. And, one thing after another, he's like, well, we're going to have to open a new division of our company. I wish I could have somebody that I could trust. I'm like, okay, fine. That's like a short version of my story of how I joined the family business. But yeah.
So, and a lot of what you do now is the company as a whole is partner with landowners, as you mentioned, to develop it. Can you just, for maybe anyone listening that has some land, talk about what made you go down that process compared to just the traditional buy it and then develop it?
Yeah, so what made us go down that path originally was really just a set of circumstances. We got approached by an owner saying, hey, I've got this land. Why don't we develop it? We were a contractor at the time. He just had the land, not a lot of experience going through the development process. So that was our first introduction to the space. And then later on, we realized that if we buy projects and we develop it ourselves, we can only do 1, maybe 2 projects at a time, just because of, the capital requirements, just the scale that it takes, the people that it takes, the resources that it takes. But if we partner with people who already have the land, then, and eventually we ended up closing down our construction company. So that opened up our geography. We no longer had to be focused on Western Washington. Now we could do projects anywhere. But now when we partner with landowners, we could do many projects and we could scale our business and actually make a meaningful impact on the housing availability. And since we mostly develop housing, multifamily, single family, we could just do a lot more and be a lot more helpful to the people and to our end customers and to investors.
And so part of that, because I assume when your father started this company, he didn't have a whole bunch of limited partners sending him $100,000 checks to start putting these deals together. And he probably would have said that was crazy if you said to go do it. What does that kind of look like? If someone's got cash sitting around, what does that look like to be part of a development deal? Because we talk a lot about in the show about cash flow. Mm-hmm. And one thing that doesn't happen with raw land or buildings being built is cash flow. So maybe talk us through that a little bit.
All right. So how much time do we have?
Yeah.
I'm kidding. So, short answer is there are ways to still look at development projects as cash flowing deals. Obviously, when you've got raw land and it's not generating income, there's no cash flow. But when we model new projects, if they are income producing projects like apartments, built to rent communities, then there's still, yes, the first 2, 3 years, 4 years, maybe there's no cash flow. But then beyond that, we still project cash flow. It's just our model is more complicated because we need to forecast all of the expenses up until the building is built.
Mhm.
And then we ramp it up, we stabilize it, then we refinance it, and then we operate it. At that point, we can exit and sell, or we can continue operating it. So there's still cash flow being programmed there. Now, there's some developments are for sale developments, subdivisions, your condominiums, your townhomes. They are for sale and they are more finite. You build it, you sell it, and it's done. In those cases, some investors, we actually haven't done it before, but I know a few syndicators have practiced this model where they would program a coupon payment to investors. Essentially, they oversubscribe the deals, right? They raise more capital. They build the margin, just like you build an interest reserve for your lender. You build an interest reserve or a pref, whatever you call it, reserve to your investors, and you pay them that monthly, quarterly coupon if that's what they want to see. Ultimately, the end result is the same. It's just the way you structure.
One you're just borrowing their money to pay it back, and there's not necessarily anything wrong with that, but it is. I think it kind of obfuscates some of what a true development deal is, right? Which is you create value by building it.
Exactly. No, it's just honestly, it's a psychological thing. Some people like to see a payment being made back to them. And I mean, okay, fine. But seriously, if you look at it, it's just like a construction loan. Every construction lender is going to put in an interest reserve into their budget. And you could also say, well, yeah, you're borrowing the money from that same bank to pay them the interest. Yes. Same difference. And in case of a construction loan, nobody really questions it. But whenever I mention that in the context of limited partners, a lot of people like yourself are smirking because, well, that's kind of cheating. I mean,
it's like you said, the math all boils out at the end.
Right.
So it's
exactly
kind of
as long as it's all disclosed, right? That's the main thing. Because what's happening is if I'm trying to hide it and mislead the investor that I'm really paying them their own money back, then that's bad. But as long as it's all disclosed, I don't think it's really bad practice.
Yeah, well, I'm glad to have your perspective on it. I think that leads really well into kind of my next question, which is, for a passive investor looking into a deal like this, what should they be looking for in a good operator? What do you look for in operators or even subcontractors you work with, things of that nature?
I mean, it's like everybody else experience, right? I want to make sure that the people that I'm working with, that they've done it before, and that project is well designed and well estimated. The worst thing that can happen in a new development project is when the set of documents construction documents is not fully developed, and you're running into a ton of issues in the field. Because the questions that come up in the field, now all of a sudden you have to stop work. You have to go back to your design team. A lot of times you have to go back to your municipality to approve the changes that had to happen because the documents weren't very well designed. And that ends up costing you a ton of time and money. And so what I'm looking for is an extremely complete set of plans without any holes in them. And it's hard to know, obviously, but when you're working with architecture and engineering firms that have built similar projects before, I interview contractors that have worked with those teams before to see what issues they had in the past. And, and then the contractor is how many projects have they built before? And that's how we judge it. Now, in development, a lot of times we put together what we call GP funds, where we invite limited partners to participate in the early stage of development. And for the tech investors, I always compare it to seed capital in a startup. So when I start working on a new project, just raw land, nothing there, and we know that we need capital, we can't just go and syndicate it through typical channels because I can't tell them exactly what this building's going to cost. I don't have a contractor yet. I don't have a set of plans. I really don't have anything. But I have been doing it for 20 plus years, right? And I have reasonable experience. And I don't know why my camera just disappeared, but I think I'm back. I have a reasonable experience to forecast what it is, but that's when we put together a GP level fund where investors get to participate at a riskier level. We typically don't offer preferred return to those investors, but they get to participate in a promote. Now, once we design the project, we bring a contractor on board early on. We estimate and re-estimate the project at every iteration of the plans. And once we are ready with our permits, once the building is designed, we are now ready to go and raise true LP capital for the construction. And, depending on the size of the project, if it's a small development, we would likely work with high net worth individual retail investors. If it's a large project, then we'd go to institutional grade investors and solicit LP capital from them.
I have a question on that. I guess for the investors that were, say, at like the GP level, that initial level, are they signing on for the full length of the project, or could they potentially step off at some point? Like if they didn't want to go all the way through, but they wanted to get a little bit of that like riskier returns, they can get that at the beginning, but then not have capital tied up for the duration of the project.
So typically, when we sign them, we say you have to go through the end. Now, practically speaking, if they truly need to get out, we would do our best to replace their capital and let them exit. The projects do get appraised at different stages, so we do have a valuation in mind when we go to refinance it. It's a little trickier with development projects simply because that early development stage could be maybe a year, 2 years long. But the full construction could be 2 or 3 years after that. So, in the 2 years that we design and permit the building, yes, it does appreciate. But like what happened in the last couple of years, if somebody started their permitting process 2 or 3 years ago, got to a permit today, and their building doesn't freaking pencil because construction costs are through the roof. I mean, yes, you can exit, but the reality is you're probably going to have to hold on to it and wait until it's time the market catches back on.
What's a red flag that you see that kind of makes you walk away from a deal quickly?
Red flag. There's a ton. Recently we were looking at this deal. Somebody sent us a set of plans. They needed a partner on a project, and in reality, they really needed somebody to finance it. Which we don't do. We can help arrange financing, but we're not investors in many cases. But the first red flag was they set us a set of plans, and they were last designed 2 years ago, or last printed 2 years ago. So I could already tell that for the last 2 years the project has been sitting. And when I ask why it's been sitting, I don't get a straight answer. I immediately know that there's something wrong with it. And usually what it means is it doesn't pencil. And especially in the last 2 years, I've been seeing a ton of projects that simply don't pencil. Because construction costs, especially here on the West Coast, construction costs have gone up so much that real estate prices haven't caught on. Rentals and for sale prices just have not caught on with cost of construction. So that's the first red flag. Then what we typically look at is environmental issues. Are there wetlands? Are there steep slopes? Is there a former gas station on the site? Those types of things, not that I can't deal with gas station contamination, but it's a cost. It's a significant cost. And it needs to be investigated, and there's risk involved. So these are the things that I look at immediately to just tell people, look, is it worth pursuing, or should we potentially wait or go separate ways, or see if there's somebody, if there are investors that are willing to take abnormal level of risk at this stage.
So you've talked a bit about market shifts and pricing changes, and you've been in this business for a while. What's something that you've learned along the way from those, some of those harder lessons of the markets do shift and things happen that maybe you're a little more uh, aware of now?
Well, the main lesson is that generally long term real estate always appreciates. So there's that, right? When we look at deals, if something doesn't work on paper today, it doesn't mean that it's not going to work tomorrow. So what we're always trying to weigh on is when is it the right time for us to keep going with the project or to start a new project? And so this is the question that I've been asked a lot, especially recently: is now the time to develop? Are we near a bottom? And I do truly think that we're pretty close to the bottom. And most commercial projects in major metropolitan areas take 4 to 5 years to develop. So what I typically tell my owners is that if you're considering a project, today is the best time to start, because by the time you're done even designing the project, is going to be at least 18 months from now. And then it takes 2 years to build it and then stabilize it. 4 or 5 years, I think, is a healthy enough window where, looking back at the history, most cycles would typically correct themselves in that window of time.
So is that where you see most of the opportunity right now, is kind of getting ahead of what the next wave might be?
Pretty much. Yeah. I mean, we're looking at opportunities all over the country right now. And of course, real estate is local, right? Every market is different. Um, I kind of bundle West Coast together because it is very similar, but Seattle's not the same as LA. And
It's okay. I say everything south of Sacramento is LA, so I bundle everything down there together.
right. So, but we're still trying to find opportunities here. I was just looking at a project in Tacoma. Uh, good opportunity, flat lot, which is right around here. So whenever you see a site where you could just easily get it to put a building without massive excavation, that's already a huge win. My other project that I was looking at has 30 feet grade change from one side of the property to another, which means a massive shoring wall that just adds a ton of cost. And so
You just
every
need to
time we
you
can,
just need to move 17 and a half feet from one side to the other, and it'll be flat. It's totally fine.
right.
Easier said than done.
right. I mean, so, sometimes I'm looking at these massive pits and I'm like, holy crap, like this is 100-foot wall around the perimeter, and it's just massive amounts of money. But that's what you deal with in most urban projects. I'm a fan of finding ways to build in a more, I don't know, streamlined way. We're exploring a lot of prefab construction. We're exploring a lot of ways to just, get things done faster.
So, speaking of getting things done faster and kind of the company that you've built, can we take a shift really quick and just talk about systems, right? Because I'm sure systems look different than when you were a kid and your dad was probably going out and swinging a hammer, to what you guys have now. So, what systems do you guys have in place that allows you to execute on these bigger projects and makes your life easier?
I mean, a ton of software that we're implementing. We scaled down our team and work with outside consultants and contractors. But we're tracking everything, automating as much as we can. I mean, even simple feasibility studies. I recently posted on LinkedIn this little write-up about not outsourcing, but using AI for feasibility studies. I mean, something that took us hours, days in the past now takes minutes, just because we can get information that much faster. And all of that, I mean, from marketing to execution, is just getting things done faster. But bottom line is, you still need to have good people on your team. With all the automation, with all the robots and AIs, you can't get stuff done without good people. So that's what it boils down to.
What's something that when you see it, or what helps you decide when to kill a project versus push through? And maybe, from what you said earlier, maybe it's not kill the project, maybe it's pause it indefinitely. But what's kind of your turning point there?
Oh yeah, no, we kill projects all the time. We have what we call a kill list. Like literally, like what is it physically going to take to kill this? And once we go down the kill list, if it's still alive, then it's got potential. But yeah, environmental always, municipal challenges always, owner expectations always. If somebody comes to us with some unreasonable early expectations, it just doesn't make sense for us. It's not worth it for us to continue pushing it if we're not aligned from the beginning. These are the main things. And then market, it's usually timing. I'm looking at this one deal where literally my first pass at the pro forma and my cost to develop construction plus all the soft cost plus financing cost is double of what the value is based on NOI divided by cap rate.
Well, you can lose 50 cents for every dollar invested. What's wrong with that?
I mean, good write-off.
Yeah, good write-off. You found the perfect tax-saving investment.
Right.
So I think one of my last questions is just, if you had to rebuild from scratch, what would be the first thing that you would do?
I mean, I'm basically rebuilding from scratch after the last couple of years of turmoil. But main thing is focus on marketing, focus on sales, both marketing our company, our brand, to my personal brand, to raising capital. I mean, when we build a business, we never had to rely on outside capital until the last couple of years when when we lost a ton of our own money. We're like, well, now we have to rely on outside capital. And so I had to learn this whole new trade of syndication and working with limited partners and what it takes to put the deals together. So yeah, I mean, these are the basic things, growing up in construction and then migrating from financial services to construction to development. My focus and what my dad's been telling me is to always focus on delivering the project. So that's what I knew. I would always be like blinders on, like, what do I got to do to get this building built? But I never thought as a true business person that in order to get this building built, I need to have the business operating, all of the departments of the business operating. And so that's, going back now, starting from scratch, I had to remember half the lessons that I forgot from my MBA program. When you're in school 20 years ago and you study all those things, then you graduate and your employer, my dad, tells me, forget everything you learned in school. Here's how we do things. But how many bosses are like that? I mean, nothing, not to talk bad about my dad. He was a great teacher and mentor, but in reality, that's what's happening in many businesses. But yeah, so now we're rebuilding and actually using the systems that we're supposed to be using. Having the financial operations, having the construction or development operations, having capital raise operations, like all those verticals need to be built and need to be functioning.
That's really good. Well, I guess kind of wrapping it up here, we, Eugene, we're the Wealth Independence podcast. I think those words, independence and freedom, and it's obviously a big part of our ethos. And so we always like to ask all of our guests, what do those words mean to you? How do you live that in your everyday life? And kind of like, what does that look like for you?
I mean, I think the main thing about being free is to do what you choose to do, not what you are forced to do. If you work 24/7, take no vacations, but that's your choice, I think you're free.
Yeah.
If you take as many vacations as you want and spend as much time with your family and don't pay attention to your business and that works for you, then you're free. But it's the opposite. It's when you do things that you don't want to be doing, that's when I feel like you're chained up. So, for me, I like running this business. I like growing this business. Am I fully free? Probably not. I'm a business owner. I'm an entrepreneur, and a lot of times I have to do things because I don't know. Maybe I don't have resources. Maybe I don't have anybody to delegate that task to. But I still like to go back and think that I chose to do this. So maybe I don't know. Maybe I just contradicted myself.
No, I definitely think there's a balance there. I don't know. I guess Adam and I'm speaking for Adam here. I would assume he kind of agrees with that, where you kind of have this choice, but at the same time, like there's always when the buck stops with you, there's always fires to be put out, right? Like it's really really hard to build something where you still own it, but you are completely out of it, and you're not having to deal with at least a handful of things. So I feel like businesses of any size, that sort of thing would always exist at some level. But I like what you said about if it's something where you're doing what you want to do. If those are the problems you want to be handling, then that in and of itself is very much a level of freedom. So
Right. Exactly.
Definitely agree with that.
Yeah, and I mean, a lot of people talk about passive investing and how you could just put your money away and forget about it. I mean, I do believe that even when you invest passively in projects, you still need to know what you're doing, and you need to know where your money's at and who you're trusting with your money. So there's a certain degree of management that has to be involved with everything. And, is that freedom? Yeah, I mean, I guess it is in a way. But that's how I'm looking at it.
Adam, any other questions you got there?
No, nothing else for me.
Well, Eugene, if folks want to find you or connect with you online, what's going to be the best way to do that?
I'm mostly on LinkedIn. I'm on all social media, EG_developer, but LinkedIn is my kind of go-to. Look me up, Eugene Gershman. I should be the top one that pops up. Other than that, GIS companies in plural.co. That's our website. Ton of useful information there. We have a feasibility study checklist if anybody wants to develop their property and wants to do their feasibility study on their own. Download the checklist and follow the steps. It tells you exactly what you need to do a due diligence and feasibility study on your new project. And also check out my podcast, Real Estate Development Land to Legacy, where I talk to all kinds of interesting folks, from capital raisers to developers to lawyers and designers, about everything that it takes to develop a project.
No, that's awesome. We'll make sure links to all of that end up in the show notes here, and everyone can connect.
Is there not a spot where someone can get your kill list?
That's a good question. I need to write it down. We'll make that list public. It's not the first time I'm being asked about it, so it's definitely a good reason to.
You might get some people clicking on it. Get on my kill list, and
right.
It might be a good ad.
Yeah, maybe I'll call it the lipstick list.
Yeah, there we go.
Well,
right.
Thank you so much for being here.
Hey, thank you guys.
Thanks, Eugene.
Well, that was a great interview with Eugene. I feel like it's definitely something different than what we've talked about in the past. A lot of times we talk about buying existing properties, existing deals, whether or not that be multifamily. I guess we do development on the oil and gas, right? Because we do go drill those wells, but I think that's even a little different. Some of our deals, like the one we did with Aspen, is buying existing development or existing production. So just a different take. It seemed like he had a good amount of experience. Interesting to hear kind of his path. It sounds like that 2022 cap rate, interest rate change kind of hit them pretty hard, but it's good to see that he's still going and found an interesting way to revamp these deals.
Yeah, no, I thought, I think we didn't get into this in the conversation with him too much, but just, development's a little bit riskier. There's more things that can go wrong. And I like that, he talked about that for some of the very early stages in their projects, they'll bring in, really sounds like hand-picked investors to kind of come in during that risky stage, which makes sense. But I like that he's got a list of like the kill list, and not going to move forward with the deal if there's certain things that go wrong. But also just interesting that they've kind of niched down. He talked about, going into multifamily more, and kind of where they're working. And obviously the construction was hit very hard, like you mentioned, as far as interest rates. But then that also tied into his comments about the cycle. And I think, Adam, you and I got to hear George Ross speak one time, and he talked about, the real estate cycle is 10 to 12 years long. And if you can survive the cycle, as long as your project has some sort of time window within that, you're probably okay. And so I definitely agree with Eugene's comments about right now seems to be a good time. It's something that starts the development process right now, really is not going to be delivered for another 5 years. And so that seems to me, if you believe, like I think he does, and a lot of us do, that we're on the upswing, we've kind of gone through the down cycle and we're on the upswing, then stuff that's going to be delivered 5 years from now would seem to be a pretty good time to try and to be exiting that. So, I think that anytime you've got sort of these contrarian indicators of a space that's probably unwanted, which new development construction definitely is right now, that tends to be a sign that you're towards the bottom, and it's probably not a bad time to be getting in. So, yeah, I don't know. You have a thought on that?
Yeah, and actually, I think it reminds me we'll probably have another development guest on here, Ken, who I was in his office the other day on the last podcast, was that with he's self-funded that deal, and I haven't brought in outside capital. But something that's interesting in the development cycle is there are different almost pause points, right? Just even on like multifamily, you could stop doing renovations if you wanted to and just keep units listed as they, maybe in their non-renovated state. I've seen Ken go through this process on a self-storage unit they're building. The entitlement phase has taken forever. They've gone through feasibility studies of different types of units and construction costs, and they've been watching the market. So he's been working on this thing as long as I've known him, right? 4 years or so. And they're at the point where they're ready to pull the trigger if they want to, but they don't have to. So just like, Eugene was saying, hey, maybe we're starting to get into that cycle. If you're going through the full cycle of all the plan drawing and all that, it can take a while, but you can also get it to the point where it's ready to break ground. And when you see it to the point where you're ready to do it, maybe you're only 12 months from completion, but you don't have all that capital outlay, call it 10-15% of your budget's burned up on entitlements and all that.
Yeah, there's definitely different way. I mean, just like with any other sort of real estate investing, like we tend to lump development into sort of one big bucket, but there's a lot of different flavors of it, right? And there's different ways to play it and different levels of risk, and like you said, depending on where you are in the phase. We talk a lot with our oil and gas projects. We like to invest in things that are somewhat de-risked because they're further along in the drilling process. And it's kind of the same thing with development, to the point that you can get in later. You may not have as good a returns as some of those people that took on the really big risk early, but the risk is definitely reduced. So lots of different ways to play it for sure. Any other comments, thoughts?
Leave us a review if you find this useful. Tell the robots that you like what you're hearing, and if you don't like what you're hearing, don't leave a review. Spotify, you can do the like and the subscribe, and the YouTube, you got to hit the like button. If you do it like 87 times, that triggers the algorithm to think that we're really, really good. So if you really like us, 87 times on the like button. Go back, like all the previous videos, all that, just like a stalker on Facebook. Go through and view all the history and click like on all of it. So
that is solid advice. I appreciate you bringing that up. And on that note, we'll get out of here for this episode. We appreciate you listening. Thanks so much. We'll catch you on the next one. And just remember, where freedom leads, real wealth follows. Thanks, y'all.
Thanks for joining us on Wealth Independence. This show is for informational purposes only and is not financial, investment, legal, or tax advice, and does not constitute an offer to buy or sell securities. All investments carry risk, and investors should always conduct thorough due diligence and consult with qualified professionals before investing. Until next time, remember, freedom leads and real wealth follows.